All right, so go ahead and tell me just if this qualifies for the PM 200 D3 trade.
This one here.
This stock, Convergys
Okay, well,
Corporation.
I'll probably have to bring it back, right?
You got it.
And bring it back
That's
so I
a
can see the highest high and the lowest low.
and that's a
So
great
there.
start. That's a great start. That's exactly what I want you to do on every stock.
So here's this guy right here at negative 2.28, and then here's this guy way up here at negative 2.39.
Yeah.
So we wouldn't get into this.
Okay, I'm going to pause you on this. Now, what I'm going to show you, remember, you did correct in expanding this graph. Okay? You did. That's what you're supposed to do. Over here on the far left, where I'm showing you this area, disregard this. This peak would not
Right.
this peak would not count. And I wanted you write these things down because one thing I've learned is somehow just whatever however humans learn, it gets cemented in when they write it down. It's better than looking at it. So I would ignore this and this, and that changes things a lot. So what I'm going to do is slide this over a little bit, and then I'll let you continue on. That's where I would start, right there. Okay? The reason why I want to get rid of this and I want to get rid of this up to this point. Kind of like look at it as like what we call in well, I'm electronics background, but this was kind of like a sine wave. This goes up and it comes back down. That's where I would start, and I would disregard all graphs, this part of the graph. So very, very important, because this could have been a good trade and you just went right by it because that leg didn't count. So I'm going to put it where you can start counting. Now, at this point, you can continue and tell me whether or not it would be a good bull trade or a bad trade in its history.
So if you go to highest high, then negative 2.4, and the negative low is low. It doesn't match. So you wouldn't want to trade this, would you?
No, that's a good point. As far as currently, you're correct. You're correct. Um, I'm gonna throw a curveball on you here. Let's pretend that we're over here. Do you see any other opportunities?
Um, so I would look at this part and be like negative 1.4. Oh, no, it's frozen, sorry. There you go. I don't know. I honestly don't know.
Okay. See how it gets a little tricky. I'm gonna make things a little bit wider for you. So you are correct in looking at the highest peak, and that's the highest peak, and that was correct. There wasn't any equal and opposite peak that was at least 2.08. But you look at the negative side. Here's the biggest peak on the negative, negative 152. It looks like negative 152. So what are we going to do? We're going to look for a peak equal, at least equal to, and hopefully higher than negative 1.52, and the opposite of negative 152 is 152. So I'll just
Okay.
so I'll just scroll the bar up, and what I'm looking at is the number on the far left. See where it says 1.03, 1, 0.97, 0.96. See that number?
Yeah.
I'm looking for 1.52. 1.52. And boom, right there, it hit it. It hit it beautifully at 1.5. So at 1.52, literally on this day, it hit 1.72, which is equal to or better or more, which is exactly what we want. So it became eligible, and it would enter my stock watch list. I would enter in CVG. If this was today, I would enter it on my watch list because it becomes eligible. It's a candidate. And the reason why we don't trade it today because it hasn't had a reversal yet. Okay? All right. So listen, I'll continue on and let me blow this up a little bit. I'm just going to come down here. Okay. I'm going to use a little arrow to help out and get things really, really clear. Alright, see, so now I'm pinpointing exactly where it became eligible, right there, when it hit 1.72. And if you look here, this was the other most recent highest peak. It only hit 1.47. And remember, we want it to go at least 1.52. Okay, so we're going to trade on the first time it has a reversal. So you can take over at this point and tell me, when would you trade? What day would you trade?
You would trade. Will we enter the trade?
Yes, on May 14th.
So we enter the trade on 14th. The first reversal. So we're trying to go short on the stock, right?
Exactly.
So the first reversal, wouldn't it be down here?
No.
Or be lower?
So
It would be below 1.52, so it would be right here.
no. 152, all that does is tell us you're trying to find an equal and opposite peak of at least 1.52 or more. And we did that where the arrow is. So now we're going to sit here and pretend it's May 14th. We're going to go to the next day and see how the blue bar goes up.
Yeah.
And see, continue on. And can keep moving the cursor to the right.
The next reversal right here.
There you go. Bing, bing, bing. That is the first reversal where that stock's starting to go down on June 9th.
These are equal.
Right, these keep going higher. See, they keep going higher. The bars keep going higher and higher and higher and higher. Boom. And then it fell. That is called a reversal. It's kind of like a peak. There's like three, kind of look at it as three lines. You have, you have a lower bar, a higher bar, and a lower bar. And the first time it goes to a lower bar, that's the reversal, which you pointed out. Okay. So on this scenario, in this particular trade, remember the name of the method that we're using right now is PM200. Right. And that means power. I call that power MACD, and I call it 200 because literally the stock moved to, not the stock, but the MACD bar literally moved over 200%. That's where 200 comes from. Okay? Then we trade on this day. Now, here's a quiz question here. What is our target? What are we trying to...
For the PM200, it's 1%.
Exactly. So go ahead and let's see what happened. So bring the price chart into view.
Price chart into view. Okay.
Uh-huh. And you know what? Since I was controlling it most of the time, it's not like you're looking for a particular button. Okay, I'll give you that hint. I'm going to take over for a second. See this little white bar? See my crosshair turned? The arrows? It's up here. Grab that.
Okay.
So you grab that bar, hold them. There you go. There you go. There you go. Perfect. Keep coming down to about halfway. Okay. Little more. Little more. Okay. Now let's see what happened. All right. Remember. So the next. This is good. You show me the entry again.
This is the entry price. This green arrow.
No.
So we entered at
Okay.
23.75.
Let's back up. That's where it became eligible.
Oh, that's right.
Okay, so show me where we actually entered the trade.
We entered down here at negative 1.52.
No, where we entered the trade.
Oh, okay. We entered at the reversal right.
Yes. Yes. Now, that, okay, so do that again. Hold it there. Hold it there. And we're looking at $25. We would have entered the trade at $25. Okay?
Correct.
So we're looking at a 25 cent. 1% is 25. 1% of $25 is 25 cents. So our target would be 24.70.
24.75.
Exactly, exactly. So move the mouse over one bar.
We wouldn't close the trade yet.
Right. And how? Right. So what you could. So go ahead. Go ahead. You're doing good. Go ahead. What do you notice happened on this particular?
So it's kind of plateauing. It's going. We would dollar cost average, wouldn't we?
Right. So when would we dollar cost average? You are correct.
So we entered the trade right here, $25, and it never went down. So it went to 24.91, and then it went back. So we would start dollar cost averaging right here.
Why would you pick that spot?
Because the price starts going back up.
So what we want to do is we want to dollar cost average on a new reversal, a new higher reversal. I'm going to underline this higher. A higher reversal is what we're looking for. All right. So when did the next higher reversal occur?
From the first one?
Yeah, after the first one, right.
The next reversal happened.
Higher reversal.
This one? This peak?
There's the peak. You're on the money. So when did the reversal occur?
Right before the peak.
No, after the peak. Yeah,
After the peak.
yeah.
Oh, yeah.
Yeah.
It went up again and then went back down.
Right. But the key is, see how this peak is the highest of the high?
Right.
Yeah. It definitely beat this. It definitely is higher than the 1.52 here. Then we're just going to go in, wait for a reversal. Boom. Enter the trade at $25. It didn't make our profit target. It didn't make our profit target. It's still hovering higher and higher. Boom. It really shot up. Now we're going to go and wait for our reversal. This is a highest peak. It's a higher peak. Boom. There's the reversal. Now, see how much significantly higher we're going to do the next dollar cost average at 26.31. Okay?
Right.
So, what I'm going to do here on this is graph is just show this is eligible. Dang it. Okay, right here. So that means it went at least 200%. From this point all the way up to this point, it became eligible. Then we would enter it on our stock watch list. So then we wait for a reversal. And that reversal was here. So our first entry, you following me?
Yeah, that's when we entered the trade.
To 25 bucks. So that's our entry, $25. Okay? And we're assuming a $1,200 investment. That doesn't matter. It could be whatever amount of money you want to invest, but I just put 1,200 bucks in. Then the trade moved on. It did not drop 1%, obviously. It took off on us. It really took off. Now listen, if a stock can only do one of two things. It's either going to go up or it's going to go down. I should say three things. Up, down, or it's not going to change at all. It not changing at all is very, 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 very unlikely. It's either going to go up or down. So if you think about it, if it goes down, we hit our target and we're happy. And we make money and we move on. If it goes up, like this guy is, there's only one other thing that can happen like this, is this MACD bars are going to go up. So we're going to wait till it has a next higher reversal. And what does a higher reversal mean? Is here, we're at 1.94. Remember, we're just climbing. From this point, we're at 172, 183, 185, 189, 194, and it dropped to 193. Okay. It, at this point when it dropped to 193, actually, technically, we should have traded here.
Yeah, technically that's our first reversal.
By the letter of the law, right, by the letter of the law, since it dropped from 194 to 193, that technically would have been our trade. Okay.
And then it would have dropped significantly and then we would have made money.
Say that again?
And then it would have dropped. Oh no, everything out of the other one goes to 25 bucks.
Yeah. Yeah. So listen, you're right. So what I'm going to do here is this. So it went to 24.87. And it dropped to, that would have made our goal of 1%. 24.87. I'm going to do something real here, quick here. 24.87. %, actually 1.02, but if we were to put it exactly, yeah, $24.62. If it fell to 24.62, and it went, actually it didn't. It went to 24.74. It didn't hit 24.62. So we would still technically be in this trade. So we'll continue on with what I'm trying to illustrate here. Is that, let's make this our entry, 24.87. Okay, so you would enter in 24.87. And we want to, if we were just to round this off, we would have bought 48 shares, is what it comes down to, 48 shares. Then we're moving on. It dropped here. Price jumped up. It didn't hit our target as we just went through. Did not hit our target. Price jumped up. And what I'm looking now, I'm not looking at prices anymore. I hardly ever look at prices. What I'm looking for is the next MACD reversal. Okay, so we entered technically here, then it dropped, and I should clarify, this is really important. I'm not just looking for the next MACD reversal. I want a higher MACD reversal. So in other words, I want a peak bigger than the most recent peak, which is 1.94. Do you agree? Right? Okay. 194, 193. We went through, we discussed everything. We're still going through, and I'm just visually going up. Well, there's the big there's the big bar here. That shot up. So that obviously, I'm going to wait for a reversal. The reversal occurred here. And it was at 26.31. And 26.31. So we're going to buy 46 shares or short 46 shares. That gives us a profit point of 25.56. That also, by the way, is where our trade is going to break even. 25.56. It's always a penny above or below what this is calculated, so probably let me enter in 25.55. Would I enter in 25.56? Interesting. Okay. Okay, so that's good. Okay, there it is. There it is. At 25.56, dang it, I keep entering the wrong number here. I should say the wrong cell. All right, 25.55. Now, at 85 cents, the trade will become profitable. This is what I call break even. We're not losing any money here. So we were going to look for 25.56 now. We're going to set our, what type of order? What type of a stock trade order are we going to enter at 25.56?
A minute order, right?
Exactly. Perfect. Perfect. So we're at this point, and we're looking for 25. Wow, 25. 25. This close was at 26.31. You know what's throwing me off right now? As I'm looking at this, and the close over here is showing 26.31. It's showing 25.49, but see in the data box? Oh, I know where I'm looking wrong. I'm sorry, I apologize. I got to re-enter some numbers. I was looking at the wrong. I entered the open. I apologize. I'm totally was wrong. See, the last here was 25 bucks. 94, 93, $25. That actually was $25. Do you see in the data box where it says last?
Which one?
The data box?
The last?
Yeah, the data box.
Which is price history, yeah.
Right. Where it says last, that's the closing price. And they move that number from the paid version. That's how come my numbers have been off right now. I apologize. So our first entry will be 25 and the next entry after that's going to be 25.49. That's going to change things. 25.49. Okay. 25.49. I always double check my numbers. 25, that's where it says last in the data box. I go to the next reversal, 25.49. So I confirm that. So now our profit point's going to occur at 25.23 or break even. Okay? 25.23. That makes more sense. So when this hits 25.23 and it hit it right here, it easily hit it, 25.23. In fact, it went down to 24.81. So on this day, the trade broke even. Okay? Did you get that? Okay. Okay. Really, this is a really important one to follow here about entering, and how it started out was we looked at this whole graph. You are correct. This would not have been a trade. But if you go back in time, this would have been a trade. Okay?
Right.
And we would have had to break even. All right.
I need to see more of it, you know what I mean? It's easy to do the enterprise and then the target, and then it gets kind of confusing a little bit down here. Especially like the cost basis, like for the shares, like how do you know how many shares to put, or yeah, how do you know how many shares to put and stuff?
Yeah. Okay, so remember, everything in yellow requires data entry. If it's not in yellow, then it does calculations for you. Okay? So to answer one of your questions, okay, however much money you want to trade, okay, say you have 500 bucks to trade. You enter in $500. That's your investment. Once you enter that number here, it calculates the cost basis automatically for you, and the cost basis is how much it's going to cost you for that trade. So you enter in how much it's going for, $25, and it automatically puts in -20 for you. Now, what I did earlier when I was messing around with the equations is because I had to correct some errors that I did. I saved this template with some other information I shouldn't have, so I just corrected that information. Okay, so the template that you have is perfect. It works. It doesn't have any of my errors that I had made since I last talked to you. So to answer the question, the only thing you really have to enter in really is the price. I would put in the commission, how much it cost you, and the activity date. Okay? So go ahead, keep asking questions about whatever's confusing you.
What's that?
No, keep asking questions about whatever's confusing you on this.
So that makes more sense with the yellow. I don't think you told me that before. Like, you only enter in information on the yellow. It's like, okay, that makes more sense.
Yeah.
And then it just calculates it for you.
Right. Right. Exactly. And then if you had to DCA again, hopefully you'll never ever have to DCA this much. That means you entered something. You definitely entered at the wrong time, if that were the case. But anyway, just enter in wherever it's yellow, okay? And then it'll calculate the rest. So for training purposes, what's going to be most important to you are this information here, and what you're going to want to pay attention to most is right here, the trade profit point. Also could be called a break-even point. That's also,
Question.
yeah.
If we only had $500 to trade, wouldn't we only use 1/5 of our money? Because if we have the dollar cost average, we want to have money to be able to do that.
Outstanding. You're correct. So technically it would be $100.
Yeah.
You're right.
We only have 500.
Right. So we would short 4 shares. Then we would short 4 shares again. Okay. And then we want to get out at $25.12. Okay. 25.12. What I want you to notice, when I enter numbers down here in this box right here that I'm highlighting, or I'm moving my mouse across, where it says enter live price, you notice the box is yellow. So that requires an entry. That requires a data entry from you. Pay attention to the trade profit and loss. See how it says negative 344? You know, that $3.44. That's at 25.55. But if we enter in our trade break even or profit point, watch what happens to this number. So 25.12. Now we're only losing 3 cents. If we went to 25.11, we just made a nickel. Okay? But what's more important than a nickel, you may be going, who cares, we want a nickel. Don't worry about that. This is just an example. If we invested $100,000 in this trade and things went haywire, they didn't go our way, you know it immediately, our profit of 1 nickel on a $100,000 investment, I'm ecstatic over. I'm happy, happy, happy. The number one reason why is if we do things differently and we don't follow our rules, instead of losing a nickel, you could be losing $5,000. Okay, easily, if you have that big of an investment. And remember, I showed you what happened with Facebook. You know, earlier, if you entered the wrong trade, that thing doubled in 11 months. So, you know, if you had a $100,000 investment and that thing took off on you, then you could be losing $100,000 if you were completely out of your mind and you weren't paying attention, you know. So I'll always drive.
You're like the guy on that bull bear product or that bull on Wall Street guy. He's like, I'm gonna show it like 3 times.
Yeah. Right. Yeah. You're just you're making a small problem into a mountain of a problem, you know. And then and mathematically, if you ever lost even 50% of your money, just to break even, you got to make 100%. Eventually, just to break even, there goes your whole year of trading. You know, you never ever want to. So that's how come this is once again I'm underlying the really very huge importance of get in and get out, have minimal losses. Your number one objective is to not lose, and I'm going to say that for as long as we talk about stocks. Your number one objective is not to lose money. That's all. So, any questions about this? And you're correct. I'm really glad you brought up that money management part. If you had $500, then just put in 100 up here. Obviously, that's 1/5 of the total you have to invest. So here, look at this. You would dollar cost average. It would cost you $200 at this point. You'd have $300, an extra $300 in the bank if you needed to dollar cost average 3 more times. But you definitely should not have to do that when you're catching a stock like this exploding up. Okay. So at this point, one last thing is we want to get to 25.12 or lower. I'd put in my limit order at $25.11. And obviously it hit 25.11 right there. It hit $24.81. And then it really, really, really collapsed. But this, I want you to never see. Remember I said about the whole psychology of trading? Don't go back and kick yourself for going, God, but look what money I could have made. It's a short. Once you start thinking this way, you're done. Because instead of following the rules, now you're following emotion. Your negative emotion. There's a huge distinction between using the emotion of the traders here, and then this becomes your emotion. And if you start thinking what could have happened, well, it's got to fall. Sometimes people go, it's got to fall. Look at how it's climbing. I mean, it's set for some profit taking. And then you start talking yourself into making really silly mistakes. I can't even begin to tell you. This is probably the number one reason people lose money in the stock market. I think that's a really safe thing to say because that's all the wrong emotion at the wrong time. Okay, so we're done with this particular session here. Like I said, as you can see,
No, no, it makes sense. I think more and more of these is going to help me so much. Like actually doing it. It's awesome.
yeah. But I want you to do this. I mean, I'm not joking. I want you to pick up a random stock, and this is a random stock. See, that's ugly. I'm just going through a list here. I'm hitting the space bar is all I'm doing. Man, these are all terrible, ugly. Yeah, just because I was looking at the ugly graphs. Okay, so these look better now. But what I want you to do as a homework assignment is to go through this yourself, okay? And I want you to pick the highest peaks. I want you to pick the highest peaks here and see. Now, definitely this one would have qualified, and I'm just eyeballing this instantly. The reason I know that is because this stock is at about negative 363. Yeah, it is at 363. And the way I'm 100% sure this would have been a trade is because I already know the highest number over here is up around 480. That easily is bigger than 363. So I would have, but I want that.
So we even look at this, but we would get rid of all. Sorry, hang on, not too far. So we would get rid of like that whole first part.
Right.
So right there.
Here, let me take a look.
Look at it.
Well, let me look at this. I would have said, remember the sine wave. It goes up and it goes down. You could start looking at it from here.
Okay.
You just want to get rid of this stuff. This is, yeah. You could technically start right here. Okay. And then you could start looking for, where's the highest peak over here? Right here is the first highest peak. Did it, and then you sit there and you go, well, did it come down to at least a negative 467 or 466? 466 is all the way down here. Wow, it didn't come down 466 till over here. But notice something. 466, if time goes, do we have a higher peak than 466? Yes, we do. Over here. This is the highest peak. 552. So, did it hit 552? And it came super close. It hit actually 544. And don't. I have this thing that I call be a computer. Think like a computer. Be emotionless, okay? If we can somehow magically program this thing to go, here's the highest peak, 552, and the software instantly goes, where's the next biggest peak? 552, 552, 552. Nope, that went to 544, and it shot up. Next stop. That's how fast I want you to just get rid of that stock. Don't go, but we're only one number off. Who cares? Move on. So I want you to practice on at least 20 stocks. Preferably I want you to do 30. I've done probably a couple hundred, just to convince myself that this is reliable. Okay? But since you're kind of getting used to this, it looks like, well, it's straightforward. Well, the more you go through it, what's going to happen is you start to realize what is an ugly stock graph and what isn't. This looks symmetrical up here. This looks good. What I can't stand is when a stock flatlines. That means it's not even being traded. You know, like this is ugly. This is just, what is that? That's not. That's no trading. You see the difference already?
Yeah.
That's terrible. Okay.
In other words, it's flat.
Oh yeah, yeah.
It doesn't really have an exponential haircut.
Yeah, it does. It's just, you should have a nice open, close, high and low. That's ugly. I don't like this at all. I don't like this at all. Next. Now this is more symmetrical, nice and even. This is now, you know, if we expand it out, it looks even better here. It nicely came down. It had a spike, and it came up. That, to me, this little cliff I'd stay away from. It shot up. Okay, this looks like something, at least it passes the eye test. Over here, I would start trading over here. Here's the sine wave, came down and came up. There you go. At this point, I would start looking. Okay? You follow me?
Yep.
So, this video is going to be, what the heck happened? Be a live demonstration of looking at a stock, when's the right time to buy, entering the trade, going through the complete process from start to finish. So, on this stock, what we're noticing here, I'm noticing, is that on the bottom here, remember, we're looking for the biggest peaks. And since the stock is heading down, it's a bearish move. I'm looking for peaks that break the red line. So what I do is I look back over time, and I see the biggest peaks, which are right here. This is the biggest peak prior to what's currently going on that I could see so far. This looks kind of close over here, but what I'm seeing is a MACD number of negative 1.02. The blue number in the data box says BVP negative 102. If I can get anything lower than negative 102, which is not, that's not lower, that's not lower. So that line is negative 102. I look for the same thing down here prior to what's currently going on today, which actually is the 18th, Wednesday the 18th. I'm looking for the biggest bar, TSV bar, heading down, and this, by the way, is the longest time frame I can open up. And as I mentioned earlier, do not count the initial bars. I never count these initial bars, so I'll start looking at this point because it's gone down, up, and now this is where I'll start to count the bars. Move this over here. This is where we're at, and this is an obvious bar. This is obviously the biggest bar prior to the current bars that we're looking at, and all we want to do is find a bar that exceeds the biggest bar, and that's over here. That's these bars right here. So on this day, it's the first day that both bars, the blue bar right here and the pink bar down here, crossed over that red line and that red line. So technically, right here at $33.50, I'm looking at the data box on Tuesday, January 17th, 2017 is when I would have got into this trade about 12:59. What's a little bit different about this, if you come over here, this was the close, 33.50. Now what I'll do is you can still get into a trade, and actually you're doing better if you can get into a trade where the price has dropped lower than that, but always make sure, since our target on this TSV and MACD method, our target's 1.5%. All I'm going to do right now is make darn sure that it hasn't already made that target. Remember, since it's going down, we're looking for a reversal. So I'm going to put this here at the close of yesterday, bring it up to the peak of today, and it looks like it went 0.81%, which is below our 1.5%. So that's still eligible to me. So what I'm going to come over and do is calculate how many shares I want to purchase at $33.30. I'll just use 33.30. So we're going to go long. So I'll put in $33.30. And also on this template, always zero out the opposite side so that you just need to do that so the calculations come out. So I just hit 0. Then I'm going to go for, let's say, a $1,200 investment. So what that calculates is I need to buy 36 shares at $33.30 for a $1,200 investment. So 36 shares is what I want. So I'll come down to my trade platform and make sure we get everything squared away. So let me make sure the ticker's ARMK, 36 shares. ARMK brings up that stock. This, by the way, we don't need. This we can discard. We don't need these rows in here at all, by the way. So then we're going to go long, so we're going to wait till it says buy. Always under the ask is when you're buying. There's our new row to enter in our trade. So we're going to, this is the account number, which it's already defaulted to the right account. I set aside one account just for going long, and then I set aside a different account for shorting. So we're going to buy at market, and we're going to buy 36 shares. So I'll put 36. I'm going to get ready to transmit this. We're at 33.30 still. Brings up a window for the order confirmation. So it's confirming that I'm going to buy 36 shares at market, and we're going to go ahead and hit transmit, and this should, we have done with this trade. And our commission is $1. We executed it at 12:59. The time wasn't critical for today. If I were entering it right on the day of the reversal, I would want to get it in as close to 12:59 as possible. 12:59 to 1 o'clock. But mainly, as I said, I got in at a better price compared to yesterday. So what do we do with this information? We're going to transfer this information, and we're going to enter it on our Bull Bear Profit Concept Calculator spreadsheet to keep track of this trade. Okay, so here is our calculator, our template Bull Bear Profit Concept Calculator, And what I'll go ahead and do is enter in the numbers down here from our live trade. So we bought, meaning going long, meaning we're entering it on the green section. And what we first have here, we know we have a commission of $1, so we'll put $1. Then our fill price was at 33.3093, so we could put 33.3093. The quantity was 36 shares, which does match. And then that's pretty much it. Activity date today will be the 18th. And that's it for entering all the information here. Now I'm going to scroll down a little bit and we're going to enter in the live price. So here, just kind of scroll down, and the live price, it ended up closing at 33.29. Let me show you where I got that. So this was the closing price today, 33.29. So we'll enter in, we can enter in 33.29, and when we hit enter, we'll see all the price. It'll fill in all the prices here automatically to keep our trade accurate. Now, what we're going to do next is enter in our limit order. Like I said earlier, in earlier trainings, we want to enter in our limit order right after we have entered in our trade. So what the limit order is where we want to take our profits. So we're going to want to sell our shares at a higher price, obviously, than 33.31, so we can make our at least 1.5% profit, which is our target. So what I'm going to do is scroll up here to the top and let the calculator do some calculations for us. So this is our target. We're going to enter in our desired profit. And what's important here, it's a little bit unusual since I entered a trade a day after the actual our actual target was right here. Remember, it met our conditions on the 17th, and that close was $33.50. That is what we're going to base our 1.5% profit on. So make darn sure you understand this here clearly. 33.50 once again. We'll enter that right here. 33.50 for a 1.5% target will take us to $34. So when we enter in $34, we should actually be higher than 1.5% because we entered the trade at a lower price than yesterday. And in fact, we should be getting a 1.99% profit target. So $34 is going to be our limit order price, and 36 shares, and we're going to have this as we're going to keep this order live till canceled, which is called a good till cancel order. So 34 and 36 would come back to our platform, our trade platform, and then we're going to sell at a limit price of $34, and we're going to enter in our position of 36 shares. We're on the right account. We're going to sell, once again, good till cancel, a limit order at a limit price of $34 is where we want to sell, and 36 shares is what we're going to trade. So it'll have a confirmation for us. We're going to sell 36 shares at a order type, which is limit. Our limit price is $34. We can trade outside regular trading hours. I have the platform to set to be true, so it's 24 hours in case the stock decides to shoot up overnight, which it has done a few times in the past. And we are good till canceled. And then we will transmit it. You'll always get this message: the order sale will be automatically canceled on June 30th, 2017, basically 6 months from now. If we weren't to look at it anymore, so automatically it will be canceled on that date. Hit OK, and that's it. So now we have entered in our limit order, which is critical, and you notice I did it within a few minutes of exiting this trade. The next thing I will do immediately is to enter in our trade plan on the platform, on the actual trade platform. This is the trade platform. Now what I'm going to do is transfer over to a section, and you can't see it, but on the far left display is a listing of stock candidates that not candidates, but stocks that I own, so I can keep track of just a stock list of candidates that I own. So what I did, I moved the platform over a little bit to the right so you can see this is actually a stock candidate list that I call own, and it's not a candidate, but it's a list of stocks I own. So I want to add ARMK to this list since I now own it. Then what I'm going to do is put a vertical line on the day I entered the trade. I designate orange as the color I entered the trade. Then what we'll do is enter in our data from our template here, so that we can collect all the data in this we're going to enter in right now, and we're going to put that on our platform. So our entry price is going to be $33.31, and this was done on the 18th January. And our trade PP is our profit point, and our profit point is right here, $33.34. And GTC, I'm going to make this a little bit bigger so it can show up. Okay, a little bit bigger there. I expanded it here. Our good to cancel is where our limit order, which was $34. And notes, whatever notes you want to have. I like to put in what method I happen to be using, which would be the TSV/XM, and it was match reversal. I'll grab this data, copy it, and then bring it over to our platform. Here's our platform. I'll enter in text, hit Control V if you're using Windows, and there is our trade plan. Then I'll put a horizontal line at our profit point, which is $33.34. I'll edit this, $33.34, and I'll mark it green since it's a bullish trade. Then the last thing I want to do, so I keep an eye on things, I know what's going on at all times, I'll put in our good to cancel profit line of $34, and I'll put a horizontal line in for that as well, so I know what line needs to be crossed for our profit to take place, 34. And it's also green. And there you go. All right, I'm happy with that setup. So we have our stock list of stocks we own. Right now it's one, and then we entered in our trade plan on our platform. So anytime we know where we stand every day, and also if we need a dollar cost average, then we'll dollar cost average. But that's our goal for now. And so come over here. So that information is perfect. $34. And I'm going to save this. Actually, we need to save it under a different name since it is one of our trades that we own. So what we'll do is go ahead and save this in a special folder that I keep track of all my live trades for this year. We can come over here, say File, Save As, and it defaults to the folder that I have live trades at. So what I'll go ahead and do is enter in or create a new folder, and I'll put the ticker symbol on that folder. So we'll make a new folder, and it'll be ARMK. Alright, so another thing I'll do before I open that folder to save our Bull Bear Profit Concept Calculator is I have default, so to save me time in entering data, I have a pre-formatted, I'll just hit this, I won't actually open it, but all I'm using is the text down here, so it'll save me a little bit of time as far as entering the name of that new file for that trade. So you can't see it, it's a little bit out of the recording window, but I'm going to go ahead and put ARMK, and then the day I opened it would be the 18th, and it was the 17th. The capital L is for long. It was a long as opposed to a short. Then I would have put an S. It was a D3 type of trade, type of chart, and then that's the name of the method I used. And then I'll go ahead and put that under the folder ARMK, which I just double clicked on, so that folder's open, and then I'll save it. And here it is. Here's the folder name, ARMK, opened on the 18th. That was a long D3 type of trade chart, and TSV and XM match reversal is the name of the folder. And that is it. I'm happy with everything. That's what I would do on every single trade I make to keep track of the trade. And that concludes this video. I didn't talk about alerts. This will be the last thing we're covering today, is alerts. So open my alert console, and this is an alert I created. Okay, when ARMK hits $34, I get sent a text message on my cell phone, and it alerts me that $34 hits, and that means I've made my profit target. So it's kind of cool. Yeah, the happy dance, man. What's really nice is when that thing hits first thing in the morning. For some reason, stocks typically hit my target right when early in the morning. And it's real simple, super duper simple. If I wanted to create alert, hit alert, create new alert, and I would say, okay, then I would hit, say, 34.01. I'm kind of laughing. My dog is whining behind me. So anyway, I would hit 3401 and just say, I was looking at typewrite. Cha-ching, man. So that alert, if it hits 3401, my phone's going to go off. And I use these alerts for all types of different things. You know, you can set an alert. You could set alerts for when certain conditions hit. You can set an alert to say, hey, pay attention, this stock may be ready to go. You know, there's all kinds of cool things you could do for alerts. So anyway, that is it. We've covered an awful lot today, an awful lot. Let's see here.